The first rates then on your screens. The Nifty, of course, is going to be important, but the composites are going to be even more critical. So Reliance on your screens then, that's where it's kickstarted trade. Technology really led a helping hand in trade yesterday. What with the moves coming in on a TechM, which held out by about 5.5%. You had an HCL Technologies hold out very well. And Wipro ahead of its numbers today shot up about 2.5%. Remember, Wipro is slated to come out with its numbers today, so that's going to be important. I also want to see what a Sun TV and Z are up to, considering broadcasters are now seeing a revival in advertising after the worst quarter in ad revenues. They hope to reach the pre-COVID-19 inventory levels as well by next month. So this is something which is important as well. Some of the brokerage notes, Bajaj Auto and Axis downgrade coming in there. Credit Suisse has initiated an RBL Bank as well as Bandhan as well, so look out for those. Citi has downgraded BHEL and Kotak has actually downgraded HDFC Bank. So look out for some of these names as to what they do in trade today. Couple of other earnings as well today. Besides Wipro, you've got a Mindtree as well, which is going to be reporting its numbers. Oberoi Realty is going to be important, and then Delta Corp as well. I'm guessing it would be a massive hit, a complete lockdown for during the lockdown months. But what happens next, considering that Goa has now allowed tourism? Are they seeing any signs of a revival already? Are they being, open for business? And that's something that we need to really hear out from the management commentary as well. A couple of other names as well. Hindustan Zinc has sought to raise about $665 million for Vedanta delisting. Phoenix Mills, again, fundraising news there as well. Shobha Developers, wherein Godrej Properties has upped stake, and Bata, very positive commentary here. They're saying that 1,200 out of the 1,400 stores of theirs are now open. So this is some good news coming in, really. Nikunj, anything that you're spotting on your screen?
Everready, Aisha, a block deal has been done. We understand that the Dabur family office has been increasing stake in Everready. We know that Everready management couple of years ago, they wanted to sell out to a couple of foreign players. The deal apparently did not go through. Interesting that, Ajay did a story about a month and a half ago where we indicated that the Dabur family has increased their stake. So 7% apparently stake sale has exchanged. Who's bought? We'll try and figure out. But right now, Everready seems to be one of those bright sparks in the mid-cap space. HDFC Bank, frankly, it's going against the grain again for the second or the third day on the row now. Look at the surge in Everready, 10% higher. That's turning out to be a big and a bright day. And then you got IOL Chemicals, again, very unusual volumes, unusually high volumes. 795, 38 million shares. No, it's very large actually. 4 crore shares now. Very large volumes there. And then from the list of 52-week high, if I have to, pick out something interesting, nothing which is catching my attention with the exception of Dixon Technology. And then you got Tata Communication. That's just been one of those rock solid stocks from 300 to 660. It's just been on a fire. Atul Suri joins us now. Let's take the conversation forward. Atul, good morning. Thank you for joining us. Atul, they say in the market that trees don't grow to skies. But in this market, that is what is happening. 1%, 2%, sometimes 3%. That is how markets have moved on a weekly basis in the last couple of weeks. How long do you think this carnival will continue? And who do you think will get the last ticket for the carnival before it shuts down?
About that. I agree with you, Nikunj, that there is a lot of euphoria. And this is not just in India, this is even global. In US, you've got this very big Robin Hood trade play out. A lot of people are sitting at home and feel that they need to make some money. That reflects in the number of new accounts that are also opening in India. And this month we've had an index that's up 5%, but the FII, DII for the month both have been negative. So one has to be very, very cognizant of what is really happening. And you'll also see that the kind of stocks that are moving, you'll find that the small cap index has outperformed all the other indices, the broad-based indices. There's a mid-cap 500, large-cap Nifty. So there is a lot of retail money that is there. As I said, people are sitting at home and they think that it's a very easy way to make money. And definitely they are doing right now, but these things end very badly. The reason is that most retail investors don't have the discipline of exiting or a case of a stop loss. So one has to be cautious, one has to be careful. And the true test of how this small cap trade plays out will be through a correction. So it is. You have a market that's running away in some segment, but as a fund manager, you have to be very, very cautious and actually are avoiding those spaces. So there is a feeling of being left out. But as I said, history has shown us that very often when people just buy something based on the low price or on liquidity and not based on fundamentals and earnings, the ending tends to be bad. And as I said, when the market corrects, I think you'll get a sense of it. The only way a retail investor can get saved is if he has a discipline of a stop loss. And unfortunately, that's something which I've rarely seen.